Hi, I'm Jim Gosart. I'm Worldwide Vice President for Republicans Overseas.
Yeah, and I'm John Richardson, and I'm working with Republicans overseas.
John, without exception, Americans living abroad are subject to double taxation. How does that
You
work
know,
and how
Jim,
does that play out in real life?
yeah. So on your first point, right, because America uses citizenship taxation for tax residency, Americans are by definition pretty much the only people in the world that are 100% subject to double taxation the moment they leave the United States. That's what American citizenship means, double taxation unless you stay in the United States. I mean, it's true. And that's why it has to come to an end, of course. But your question is, well, how does it work? Well, on the most basic level, let's use a simple example we keep using. We have a U.S. citizen living outside the United States. They are required to report all their worldwide income to the IRS. They have to report to the IRS, so they're subject to taxation by the U.S. They have to report in the other country, so they're subject to taxation in the other country. Voila, double taxation. And we've had some discussion of how that can be masked a little bit. We talked about the foreign earned income exclusion with its limitations. We've talked about the foreign tax credit rules, which are really a mechanism to not end double taxation, but just a way to pay U.S. taxes owing by utilizing taxes paid in the other country and the benefits of that because you can build up foreign tax credits. But Jim, it is absolutely the case that there are certain instances where foreign tax credits cannot be used, and Americans abroad are absolutely positively 100% guaranteed under the Internal Revenue Code to be subject to double taxation unless there's a treaty that helps, which usually there is.
Well, and there are circumstances where this can really be seriously impactful. I'm thinking about retirees, pension income, things like this. This can really where an American might retire in from having had a career in a certain country. They retire, and guess what? What they're counting on as retirement income is not taxed in their country where they live, but it is taxed by the IRS. That can really be devastating to Americans living abroad, can it?
Well, it certainly can. U.S. citizenship taxation is a ball and chain that follows any U.S. citizen anywhere they go in the world. It creates discrimination against them from in their own country where they live from the point of view of bank account access and stuff. It creates tax discrimination because if they're an American abroad who has non-U.S. source income or assets, those assets are taxed more punitively than if they were in the United States. But it also creates instances of pure, pure double taxation. Let me give you an example that's been fairly timely on this, right? Now, so in 2010, the Obama administration, as part of the Affordable Health Care Act, had to pay for this, and they created something called the net investment income tax. Now, for tax people out there, I acknowledge what I'm about to say is an oversimplification of how it works, but that's okay. So let's imagine, so it's a separate tax, right? In addition to the income tax of like 3.8% of the investment income. Okay. Now, let's imagine you're a U.S. citizen living outside the United States in, say, Germany, and all your assets and everything are in Germany, and all of your investment income, therefore, is German source. Now, you're an American citizen, you're subject to the net investment income tax, you'd pay the U.S. 3.8% tax on that. But you know what? Germany's got a fairly brutal tax regime, and you can be sure they're going to be taxing that as well. Maybe at 3.8%, maybe higher, whatever. But Jim, this is amazing. The way the Internal Revenue Code was specifically written is to deny people the availability of and the benefit of the foreign tax credit as a mechanism to pay that US tax. So let's say Germany taxes that at 5%, US taxes that at 3.8%. That extra 5% is pure double taxation, no tax credit allowed under the Internal Revenue Code, and that is the price of being an American citizen who has the temerity to have non US investment income.
It just chases you no matter where you are, doesn't it? And it's why the only solution here, John, is just eliminate, repeal citizenship-based taxation, go to a pure residence-based taxation regimen. And it's why Republicans overseas stands where it does on this issue, that citizenship-based taxation needs to be repealed and sever citizenship from tax residency. That's why the paper that you drafted, which Republicans overseas fully supports and stands behind and has adopted. That's why we stand where we stand, John.
And we should, everybody should. Jim, what's lost in the discussion is this is a moral issue. This is fundamentally a moral issue. Why should
Certainly
somebody,
is.
because they're an American citizen, be the only group of the people in the world who are automatically double taxed?
For sure. It's
It's
also a
incredible.
competitiveness issue, John. Why should an American-owned business have this tax penalty on them that they got to pay tax in their local country that their competitors don't? And you would think the tax code would be oriented in a way where it encourages American free enterprise to blossom and prosper, no matter where in the world that it's headquartered.
There's no end of problems to this, Jim, and it is so complex. It is so convoluted. It is so complicated. It is so vile. It is so immoral. It is so unjust that there's only one solution, and that's what we're proposing: a complete severance of citizenship from tax residency. The cancerous tumor needs to be removed. That is the only thing that will solve the problems of all people, all the time, under all circumstances.
Very well said, John. Well, thanks very much, John, for once again for your expertise. Much appreciated. And I'm Jim Gosart. Thank you all for listening.